Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. In 2023, Terra Alpha Investments financed 82% less carbon emissions, 88% less water usage, and 35% less waste generation through the firm's investment portfolio. Tim Dunn is founder and chief investment officer of this firm that invests in forward-thinking companies that are profitably leading the transition toward a sustainable global economy. Terra Alpha engages directly with portfolio companies through proxy voting, thematic campaigns, and company-specific interaction. Last year, the firm also conducted its diversity, equity, and income data disclosure expectations of companies in their initial engagement letter and had 92 active engagements with portfolio companies. Terra Alpha's ultimate goal is enabling a sustainable planet for society, which the firm does through portfolio construction, corporate engagement, and thought leadership. Hello, Tim, and welcome to the Sustainable Finance Podcast.
Thanks, Paul. Glad to be here.
We're very happy to have you with us today for this program, and I want to thank you and say congratulations first on your firm's impact achievements in 2023. Please explain what financing less carbon emissions, water usage, and waste generation in your portfolio means to an investor.
Sure. And let me just say one thing up front, because I want to emphasize something that you pointed out in terms of what we're trying to do when we're investing and doing our impact work, which is we're, as you said, trying to enable a sustainable planet for society. And we do that by identifying companies that, as I said, are profitably leading a transition to a truly sustainable economy. Now, I think it's important to clarify what we mean by a truly sustainable economy.
Yes.
That it could mean a lot of different things to different people. How we are defining that is companies that are providing some level of societal benefit in their operations or their products and services, and that are working towards alignment with our planet's natural resource systems capacity. Because we know that all companies, we're overtaxing those systems, and the path to transition to sustainability includes major companies changing how they operate and how their products and services use and impact natural resource systems to a regenerative level. So that's just the level set kind of how we think about that and how we think about investment.
Good starting point. Go ahead.
Sure. And so in terms of what we mean by financing less emissions, think about it as people think about their consumption behavior. If they're, going to buy a new car, do they consider how much emissions it's going to have, as in mileage per gallon, efficiency of the car, or how big it's going to be and how much energy it will use in a life cycle? Or if they're buying food, and do they want organic food or non-organic food? They're thinking about the impact of both the product on their life, their everyday life, but also the product and how it was created, its impact on the planet. So if you went into, many people go into a store and they just buy products. They don't think about those issues, but a lot of people do, and they want to know how that's changed their own health or how it changes the planet's health. You can do the same thing with your investing. When you're investing in a company, your investment is responsible to some degree for financing that company's operations. You're a partial owner, so you own part of their impacts, for better or worse. So if you own an index fund, for instance, you own the market. You own all the companies basically in the market, and you own the business as usual economy that comes with a certain level of carbon emissions, water usage, waste streams, soil health impacts, et cetera. Now you can, instead of buying that basket of standard market economy-wide index fund, if you had a fund, for instance, like Terra Alpha, that is intentionally choosing companies that are transitioning to more efficient use and impact of natural resource systems, you're owning a less negatively impactful company, impactful and sharp the planet system. So So it's an outcome of our process of investing in companies that are more efficient and smarter about how they use and impact the environmental systems. You return your money is invested with companies that are better for the planet, and that's
Okay.
what those numbers really reflect.
Okay, great. Now, 92 active engagements in 2023 with portfolio companies. What percentage of the total portfolio companies that you own does that cover, Tim? And tell our followers what an active engagement by Terra Alpha looks like.
Sure. So, of course, over the course of 2023, we owned 70 companies. Whether during at some point during the year, we were invested in 70 companies. We had 92 specific engagements, and we engaged with every company in the portfolio in some way. And as you noted in the introduction, that engagement can be a broad campaign around an issue. It can be a very company-specific issue that's part of our customized process we can get to. But we, in some way, had interaction with every company in the portfolio, either through a letter we sent, emails that we interacted with the investor relations or sustainability team, or it could be even more senior levels of the team, for every company in the portfolio in some way last year. So our engagement strategy, what is our engagement strategy? What is the goal? And what is the process? So it starts even before we invest in a company. As part of our research, getting to know a company, one of the things we're doing is understanding the issues that we like about the company and the issues we may not like as much, but we think they can do better. And we're starting to think about how we might want to talk to the company to make those changes even before we invest. When we actually have invested in the company, I should step back. And part of that analysis is around what we call environmental productivity, which is how any company that we are considering uses and impacts natural resource systems like fresh air, clean water, soil, healthy soil, oceans, forests, et cetera. So we want to understand where they stand around those issues and what their path ahead is and what they can do to improve. So when we first invest, sometimes before we invest, we interact with the investor relations or sustainability officer of the firm to start to give an indication of things we could see where they could do better. Once we have invested, we send a letter to the CEO of the company telling them, we've invested in your company. This is how we invest. Exactly what we've just talked about, that transition, companies that are profitably in transition. And here are some of the things we really appreciate and value that you're already doing. And by the way, here's a couple of things you could do even better. And that positive kind of engagement from the very beginning sets the stage for ongoing conversation that is supportive to the company. Now, what are we trying to accomplish mostly in our engagement? Our big impact goals as a firm are the reduction of greenhouse gas emissions, the reduction in the use and impact of freshwater systems, the reduction of waste streams, and improved environmental practices and disclosure of those to all investors. We develop a customized set of goals or engagement strategies with each company in the portfolio. And our analyst is the one that leads the process of both building the knowledge of the company and engaging with them on whatever issues we've decided that makes sense. And that's with some guidance from myself as a CIO, but also much more importantly from our Director of Corporate Engagement, Amy Dunn, who's been doing this kind of work for over 20 years. So that's kind of the highest big overview of the process. I guess just to Claire, just at the end, a couple of key points. Because we're a long-term investor, it really allows us to build a connection with the company and some legitimacy, because we're not the biggest investor in the market, but we've been very successful at having real conversations with the companies. The analyst is responsible for understanding the company and developing the engagement strategy and doing the engagement. So it's not a separate kind of department. We focus on material issues that we think are material to that company and to the world, not just a common set of issues for every company. So it's customized to each company. And our goal is really to help that company be more successful, which is both good for the world and actually good for our portfolio investors.
Good. Okay, so Tim, Terra Alpha has already surpassed your 2025 portfolio science-based target coverage goal of 75%. I'm assuming that's 75% of the portfolio companies. Give our followers who are not familiar with science-based targets a brief description of them and tell us what is significant about the early achievement of this portfolio goal.
Sure. Science-based targets there's a lot to unpack there, I should say. And at the beginning, I'll point out when we talk about science-based target coverage, portfolio coverage, that is the percentage of the money invested in companies that are in companies that have a science-based target, a validated science-based target, not the number of companies, but actually the percentage of the portfolio that's invested in companies with science-based targets.
Okay.
So what is a science-based target, first of all? So think about a science-based target. It's generally around the company's goals around greenhouse gas emissions. That's what it's referring to in this context of science-based targets. It was the first version of the science-based targets initiative, was focused on greenhouse gas emissions. And their goal was to help companies set targets that align that company's future with the overall Paris Accord agreement to keep global temperatures below 1.5 degrees above pre-industrial era. So what does that really mean? So think about a target. We've all had New Year's resolutions. I'm going to lose 20 pounds. A lot of companies were doing those kind of targets. They were saying, well, we're going to reduce our emissions by 10% over the next 10 years. That was, if you went back 10 years ago, that would be a leading company would set some sort of goal, some sort of target. Well, obviously, not every company starts in the same position, just like not every human doesn't start in the same position. So a science-based target is effectively thinking about it as, instead of you just coming up with a number, I'm going to lose 10 pounds, maybe you go to a doctor or a diet specialist. And the diet specialist says, given your body size and your frame and all the other attributes of your age, this is how much you should lose. That would be a healthy place for you to get to. And maybe in some cases, you should gain weight, right? No one needs to gain greenhouse gas emissions, but it is specific to that individual, that company. And so that's what the Science-Based Targets Initiative is to help companies set realistic targets that are going to help address the climate challenges we face, or help mitigate the climate challenges we're going to face in the future. So we've been promoting science-based targets for over 7 years, and the Science-Based Targets Initiative has been in existence for 9 years. So we were very early focusing on this, and the idea is helping companies set realistic goals that are relevant to the real world, as opposed to just some sort of stated goal. When we first committed to a science-based target coverage, we had about 43% of the portfolio invested in companies that had validated science-based targets that go through a process of committing to a target and having it validated by this organization, Science-Based Targets Initiative. And then, of course, you need them to have a plan and actually start to progress to achieve that plan. So we started in 2019 with a science-based target. We were at 43%. Today, we're at 74%. It's just slipped a little under 75% because we sold a company that in the portfolio that actually had a science-based target and bought a company that didn't. Now we expect that company will eventually have a science-based target, but it is an iterative process. And ultimately, the goal is to, having a portfolio of companies with science-based targets is great, but they need to have a plan to achieve that target, and you want to see them progressing. And at this point, it's as of in the end of 23, 43% of the portfolio companies are seeing lower emissions in the real emissions globally from their operations and their value chain. So it's a step in the process. The commitment's important. The validation is very important. Having a plan is very important, and actually progress is essential.
Yeah. Now, Tim, here's another area that I think there's currently a lot of tension in between economic innovation in the form of artificial intelligence and environmental impact in the form of more and more data centers needed to provide all of that artificial intelligence. How does Terra Alpha navigate this current tension in the marketplace?
Yeah, and this represents one of the many really complex trade-offs that we all have to face, not just investors, but policymakers, consumers, and everything we do. What is the right path forward? We all have a common interest in a better future, and we want to see that. And some of that, means that some businesses are going to grow faster than others, and that comes with potential risks or issues. So AI is kind of, the AI-driven data center expansion is, kind of center stage right now in terms of the biggest challenge we face in terms of growing emissions from a business that has potentially huge positive and also potentially huge negative social benefit and environmental benefit. So this has been, we are invested in a number of large tech companies, as many people are, and those companies are seeing a lot of growth from the interest of artificial intelligence and cloud computing in general, because of all the trends that are happening in society as well as in technology. But that's, many of those companies have science-based targets, have set goals to reduce their emissions, but these very energy-intensive business data center businesses come with a real environmental impact in terms of emissions and water use and community impact. And our future as a society is got to be driven by innovations that allow us to prosper, but also finding ways to have that growth be disconnected from negative environmental impact or reducing that. So it's something we've been engaging with the companies in the portfolio and companies not in the portfolio around this, trying to raise also awareness, working with some environmental nonprofits, some academics, and being out there talking to the companies in various formats to remind them that they've set these commitments around science-based targets for greenhouse gas emissions, and they're not meeting them. I mean, Microsoft had reported a 30% increase in carbon emissions from their operations last year, 23 over 22. Alphabet has just come out and said that their total emissions from 2019 base are up, I think, 40% over that period of time, rather than going down. And a lot of that is because they're just building so many new data centers that come with emissions and water use. So this is something that, we're not saying we should stop having innovation. We should stop having artificial intelligence and learning about it and how it might help health outcomes or societal outcomes or just grow the economy and create opportunities. But we shouldn't forget that they come with a cost that is not being fully recognized. And the companies are making plenty of money to invest more in renewable power and more efficient operations of those data centers. And we need to hold them accountable to that.
Okay, good. Well, I'm glad that Terra Alpha is on the case there. And finally, Tim, how are investors in Terra Alpha responding to the growing evidence that we are reaching environmental tipping points on the planet in a number of ways? What kind of response are you getting from your portfolio companies when you have that dialogue with them?
I think we're in a very interesting time where there's a lot of cross currents, and I think if reading the newspaper and social media, you would get the impression that a lot of the progress that had been made on environmental performance issues and concerns had dissipated and maybe been reversed. When in fact, what we're seeing is both our investors, but also the companies we're investing in, despite what's going on with some of the big tech companies right now, fully understand the challenges that they're facing, fully know that they need to be more responsible for their use and impact of nature, because they see, frankly, risk to their own business for failing to do that. I mean, you're seeing growing destruction of soil health, healthy soil that can grow food, and you're a food company. That's that's a real problem, or you're a apparel company that needs cotton or other materials. If you're, if you're finding it harder to get water to run your operations, or even be allowed to use water in a local community because there's just not enough, you have a problem, and you have to figure that out. Because in any community, local community government, if they have to choose between citizens having water or a factory having water, they're going to choose citizens, right? They're the voters. So I think companies understand this. They also understand that their employees expect them to do more, and their customers expect them to do more. So companies are doing the work. It is helped by having good policy, supportive policy, and that's going to drive even faster change, driven largely these days by European Union, Japan, Canada, less so the United States, but a lot of those regulations apply to U.S. global companies.
Right. Global companies are required to follow those regulations when they're doing so much business or have so many employees, and in a country, right? They're subject to the regulatory regimes in that country. Yeah, and that's a global issue. So, Tim, tell our followers where online they can learn more about Terra Alpha Investments and how they can reach you with questions about the topics that we've discussed in today's episode.
Well, we try to be we try to share our thoughts and be as transparent as we can, and particularly around our thought process and some of the research we've done. So on our website, which is the terraalphainvestments.com, we have a resources page. It has white papers we've written on all the key issues, whether it's carbon emissions, water issues, what is a science-based targeted climate action plan, et cetera. We do periodic newsletters. We do quarterly newsletters that are full of information that we think is useful for anyone, whether it's a company's investor relations person or an investor or just an average person who wants to learn more. And people can sign up to receive our newsletter on the website. And then, we have two email addresses. It's info@terraalphainvestments.com or investor@terraalphainvestments.com. We are only, to be clear though, our funds are only available for accredited investors, and our compliance officer and the SEC would want to make sure that I made that clear. We do have funds that are available and open to new investors, but again, they must be accredited investors.
Okay. Now, are there links that you can send us that we can attach to this program online so that people can go to that research and your newsletters and the reports that you've done? Yeah. Great. If you'll do that, we'll really appreciate it. Okay, and thanks again to Tim Dunn, the Chief Investment Officer at Terra Alpha Investments, for joining me in today's program. And to our followers of the Sustainable Finance Podcast, join me again next week for our next episode. I'm Paul Ellis, your host, and this is the Sustainable Finance Podcast.